While we're waiting for the intermediate decline to run its course, I'm going to do a little video here on some technical parameters. So I think this is important to be aware of. Markets. So when you're in the advancing phase of an intermediate cycle, overbought conditions don't necessarily mean that you need to sell. In the advancing phase of an intermediate cycle, overbought can often embed in the overbought condition, and that's exactly what we saw here on this rally. This is the 5-day RSI. You can see how it embedded in the overbought condition. So if you sold your position just because price had gotten overbought, and let me expand this a little bit. So this, if you became acclimated to selling quickly, like once we started down into this decline, then these overbought conditions tended to turn price back down quickly. You can see here we get a little bounce, and then it turns price back down quickly. We get the undercut, and then we're off to the races. So if you had gotten acclimated to expecting overbought conditions to turn price back down, and you sold your position here as soon as it got overbought, and then you sat on the sidelines waiting for an oversold condition before you bought, then you missed the entire rally. So traders should be aware of that markets act and behave differently in the advancing phase of an intermediate cycle as opposed to the declining phase of an intermediate cycle. So, and then the opposite is true in the declining phase of the intermediate cycle. Price can remain oversold and embed in the oversold condition. So I watched as a lot of traders tried to take profits, on all of these overbought conditions, and they end up missing the rally. And now I'm watching, and it's usually the same traders. They don't seem to learn their lesson. Now that we're in the declining phase of the intermediate cycle, and you know that because we're making lower lows, that is an indication that we're in the declining phase of the intermediate cycle. And now I'm seeing the same thing. I'm seeing these same traders that were trying to sell overbought conditions during the advancing phase. Now they're trying to buy oversold conditions in the declining phase. And they don't, these strategies just don't work. You have to use the appropriate strategy for the phase that you are in the intermediate cycle. So when you're in the advancing phase, you just ignore overbought conditions. They don't really mean anything. It doesn't mean that price is going to turn and go back down. And when you're in the declining phase, oversold doesn't mean that a bounce has to happen. And you can see this really clearly here in the mining sector. we got oversold, and then price just kind of churned sideways a little bit, allowed the 10-day moving average some time to catch up to price. And let me put that 10-day moving average in there. All right, so you can see price kind of churned sideways, allowed this moving average, which was up here at this point, to come down and catch up to price a little bit, and now it looks like another leg down is beginning. So keep this in mind. In the advancing phase of an intermediate cycle, the surprises come to the upside. In the declining phase of an intermediate cycle, prices or surprises come to the downside. And now let me go over to gold again. All right, so let me stress that intermediate declines almost never, especially in the metals, almost never finish until the trend line, the uptrend line, is broken. We haven't done that yet. And very often this is not the end of the selling, but the beginning of where the selling starts to become aggressive as the technical traders get stopped out of their positions on this trend line break. So, just because price breaks this trend line doesn't mean that is going to be the bottom and we're going to take off to the upside at that point. That could very well be where the selling really starts to get aggressive, and it's pretty rare for an ICL to bottom almost immediately right after the trend line breaks. Usually it has to move a considerable distance below that trend line before we get a bottom. And generally, as I've said before, what has to happen is that the traders that ignored the warning signs, the lower low, and they're trying to hold their positions, they've convinced themselves that they're holding long term. Those people have to panic sell, and that usually requires a bloodbath phase, which is the 5 to 7 days of all-out panic selling. That is those long-term holders. Finally, they can't take the pain anymore, and they just panic sell their positions. That's what the professional institutional traders are usually watching and looking for. They're looking for that panic selling, capitulation selling, and once they see it, that's where they buy. And it takes the institutional traders to come in to stop the decline. They have to cover their shorts, and then they have to start buying, and they usually don't do that until they see the long-term traders panicking and selling their position. So let me stress again, I think you want to have patience here. We want to see this trend line break. We probably want to see price accelerate to some degree below this trend line, and we really want to see some signs of all-out panic selling by people that are trying to hold long-term positions, and they just the decline just goes further than they were at all expecting. When you're in this uptrending market, you become acclimated to prices only going higher, and you convince yourself that any decline is going to be mild. And so it takes a lot of decline to wipe out that kind of sentiment and force those people to sell their position. So that's why these ICLs usually go deeper than anyone is expecting. When we get the top up here, when you get the top, people are just looking for price to the moon, and you have to wipe that out completely before the ICL forms. So I think we're minimum we're probably 2 or 3 weeks away, and we may be more than that. So again, I'll put my email address there if you want to request a position in the premium SMT newsletter. I'll keep some tabs on this, and I'll try and call the bottom in real time. I'm going to be looking for the same signs as the big professional institutional traders before I give the go-ahead to go long in the metals again. But again, don't forget and always keep this in mind that ICLs create buying opportunities. Usually, the bigger the ICL, the bigger the buying opportunity, the more fuel it will create. So the longer a market rallies, the more fuel it creates for a decline, and the decline usually goes further than most people expect. And the opposite is true on the other side. The bigger the ICL and the more damaging and scary the ICL, the more fuel it creates for the rally to the upside. So as long as you're not one of these people trying, that have ignored the warning signs, the lower low, and you've taken your profits and you're on the sidelines and you're waiting for the buying opportunity, then you kind of want this to be a really deep, scary decline, because that is going to create the fuel for a monster rally once the decline is over and the institutional traders start accumulating their long positions again.